This video is going to summarize my highlights of Tenet FinTech's earnings, MD&A, and conference call from late November 2022. In terms of revenue, it was a decline in revenue, and I believe their chief financial officer said this was their first sequential decline in revenue in the history of the company. The only small positive I kind of gleaned from the revenue is that the margins actually did increase. They had a 17% margin last year, and it did increase to about 21% this year. Unfortunately, declining revenue, but at least their profitability didn't decrease. This isn't great revenue great margins for a tech company. So it's not China that really excites me about this company, but their potential North American growth. My next focus in going through the numbers was how much cash did they burn, and sort of how long can this company survive, and if they raise capital, how quickly will they burn through that capital. So they had a net loss of $7.7 million, but that includes non-cash items. Their cash flow from operations was a negative 3.5 or so million. So they're roughly burning $1 million per month. Okay. Obviously, it's a little bit more, 1.1 something. Okay. So I think that's an important number to realize going forward. And then we got some clarity on future Canadian expenses. And it sounds like they're not going to keep growing as they grow revenue. In terms of actual cash, that was cash from operations. They did have about $3 million impairment. I think this is largely Heartbeat in note number 9. So that one-time item caused a drop of their cash from 15 million down to 8.5. So a pretty substantial loss in cash. So they're losing $1-ish million per month, plus whatever one-time items will continue to hit. They have a section on liquidity. So as of a couple days ago, they have approximately $4 million. So I was curious what this number would be. Not a very comforting number. Surprised by the last statement. I'll just highlight it. Whether I agree with it doesn't really matter. But in the opinion of the management, the company has enough cash to get through the next 12 months, or cash and access to capital to get through the next 12 months. Now, I assume this doesn't include the prospectus, that would just include any type of capital lines they might have, though I've never heard of them. So anyway, that's what they're saying, but that doesn't give me a lot of comfort. Some highlights from their Chinese operations from the MD&A. Not really much to talk about. Sounds like July was a good month, and then sort of, as we know, China's been sort of open, closed, and it really hurt them. I think I underappreciated how much they were going to get hurt in China. I think we all knew that the Chinese economy was struggling, and I and maybe other people underappreciated it. They did talk about how well the delivery services and the fleet platform was doing, and how the insurance industry got particularly hurt. And the Heartbeat platform had just 1.7 million in revenue, and that was expected to be much larger. The news about the Canadian operations is much more relevant. So they've grown to over 60 employees, and that is 20% of their current expenses. So their expenses were 18 million, so that's a little under 4 million of their expenses. They got a question on the conference call about how many businesses they need, so I'll address that later. But currently they have 4,000 small and medium-sized businesses on the platform, and at least one large bank. They do expect some advertising revenue starting this quarter, but they won't have data science revenue until the first half of 2023, which I inferred to be the later part, but later they made comments of having some revenue in the first quarter of 2023. I was certainly interested in raising capital and any comments they had there. Unfortunately, we didn't get much. They said the recalibration of Tenet's board led to a delay in filing a prospectus, so not really that much there. In the capital markets section, we didn't get a lot more information. They talked about being in contact with the SEC, believing that Form 40 might get resolved this year, but really it's no certainty. It's just sort of more of we hope in the future. They were a little bit more specific this time, but still it's a lot of things that they hope to happen, both the NASDAQ with the Ontario approving their short form prospectus and their uplisting. Plans for North America, fully rolling out the Canadian Hub, and then they talked a bit about getting the American version of the Hub started this quarter, but not really rolling out fully till the later half of next year. Then I'm switching over to the conference call, and then the Q&A part will come last. And the Q&A second half I found much more interesting. So they talked about the challenges in China, talked about making progress in diversification. I didn't think there was a lot of details about that progress specifically, but they say they're making progress. And then they say that they had that huge revenue miss this quarter, but they're saying they first said a lot, and then later the word switched to some of the Q3 revenue that we didn't get was not lost, but just deferred. That these are loans that are currently being held up due to banks not willing to lend the money right now, because they have to be sure that they're going to get their money back. And a lot of their loans, or most of them, are pretty short-term loans. So they're hoping in the future that these, as the economy sort of opens up, that some of these loans will be made, that it's not a total loss. And then they mentioned there being an alternative lender that might be stepping in. And then the very last bit of the conference call, when it went back to Johnston Joesph, he came back to this with sort of not a bombshell, but a big comment, and I'm not sure what to make of it. So we'll address that later at the near the end of this video, what he said. Canadian Hub launched the day of the call. And they talked about the advertising revenue that was already mentioned in the MD&A starting this year, and data science revenue prior to the end of the first quarter. I thought this was a little surprise. Anyway, they had said revenue by the end of the first half, but now they're saying in the conference call some before the end of the first quarter. So I assume this would be a tiny amount of revenue, but a non-zero revenue before the end of the next quarter. The first quarter of next year. Talking about capital markets, which was definitely my number one topic when my ears would perk up. Johnston Joesph talked about the need of capital to grow. They're having discussion to get back on the NASDAQ, and this is the most explicit he's been in saying that it could happen this year. So I'm taking it to believe that, assuming that there's been a bit of progress, in order for him to actually make this comment. Again, he's even saying could, so this is certainly not a for sure. Then my summary of the sort of prepared questions. Investors could submit questions, and so the investors weren't reading these off. The first question was about Fleet, and just to talk about it, Johnston Joseph's answers that it's very important to get a complete offering so they don't have to outsource. Clean energy has been talked about before, and that was the topic of the next question. A little bit of numbers. He says there's a project in the works that could be 10 to 15% of their revenue, and that this clean energy project is both within and outside of China. So 10% of revenue, if they're at 20 million-ish per quarter, that'd be $4 million, so 2 to 4 million, so a pretty good size. And then we get into the questions that I found most interesting from here on in. How big does the hub need to be in order to start monetizing it? Earlier, we got the 4,000 small and medium-sized businesses. We got a pretty specific answer of wanting at least 500 per industry. And then he talked about the 4 key industries. And these are sort of direct quotes or direct from his words: retail, manufacturing, construction, and technology. So the 4,000 on the hub is not evenly spread out, but he said they have enough in these 4 key industries already, particularly in retail. Obviously, hitting the minimum lets you sort of start doing some analytics. So this 500 number that he's saying is below 500, you really can't do any analytics or do anything with your data. And that 500 is the minimum to start the starting of their software and their proprietary advantage, actually doing something meaningful for these companies and to deliver something to the banks to help them deploy their capital appropriately. Expansion expenses in North America and Canada. I found this interesting for modeling things going forward. Says it's a very different business in North America. It's not a cost of service business as it is in China. And these are sort of, again, direct quotes. So Johnston Joesph said they need to manage and run the platform, do marketing, and then they're going to have business development. So a lot of those costs are probably already set up in Canada. They have those 60 employees. So they should have much larger margins. Okay. And there should be a lot of leverage now going forward. These are my words, not his. That if as more revenue comes in, there'll be a lot of operating leverage because they won't have to grow expenses alongside that revenue. There's a very sort of specific question about how is the capital markets problems affecting the expansion. He just said there is an impact. They're going to have to grow more slowly. He said the delays are within, and this is a quote, normal delays regarding the prospectus. Again, that's his words. I'm certainly concerned about the delays, and obviously it's not a great market to be trying to raise money, so any delays is certainly a strong negative. Then the conference Q&A section was over, and Johnson came back to talking about the delay in the guidance update and dropping the guidance from the 210 million, I believe, and why did he wait so long? Saying, in the 9 months, it's obvious that they had 100 million in revenue, and how on earth could they possibly hit it? Why did they delay? And this is, a question he said, was Tenet expecting $100 million in Q4? And he said, emotionally, yes, that they were expecting potentially to have $100 million in revenue in the fourth quarter of this year. He said that they're talking to a lender who can allocate not millions, but billions of dollars to the platform. And this seemed to be the big change and why they could have potentially had $100 million in revenue. And he said the deal is pretty much in place now. So I'm not too sure what to take from this. It certainly would give us some hope. But with Tenet, it's what you can deliver, not what you can say, at least with me right now. So that's certainly intriguing going into Q1 of next year. We're so late into Q4, and this deal is not in place that there's not time for it to have any substantial effect on the revenue in Q4, at least in my opinion. So where this leaves us financially, I'm expecting very similar revenue in Q4. Just plugged in 22 million in my model. Yellow is actual numbers, green is what I always use for my projections. They're going to be half-ish of that original 210. And I'm not even trying to model Q1 or next year. There's way too many variables. It's way too difficult to model. Well, modeling North America, I just model 0, at least for the first quarter, and not much for the second. China, on the low end, I'm figuring 20 million is probably the floor of revenue, and the high end is, you listen to Johnston Joesph, and maybe 100 million per quarter. Based on that last call. So this is a ginormous window, and I'm not even going to try to guess where we fit in between. It's an interesting company. China, not super interesting to me, at least with the margins not being super big. North America is a bit intriguing. I haven't sold anything, haven't bought anything. It's a small position. I think it's my 15th biggest position. It's interesting, and at least at this point, when the stock goes up or down, it's not a huge swing to my portfolio. It's something that, if it can double 10x, then it would have an effect and certainly benefit us. One thing I got thinking in making and wrapping up this video, and it's something we should all think about, is what if this actually worked out and they raised capital? It's good to think of a plan of what you would do. So if you had something like, I'll just pick a round number, if you had 100,000 shares, 10,000 shares, and let's say you pick them up at around $1, you pick them up recently, so you've got $10,000 in. If the shares did double to $2, you now have $20,000 in profits. If you sold half your shares, you could have your money back. Okay? I would start making a plan of how you would spin off or sell off shares and get some capital back and at least get the house's money back if things did work out. And sort of pick an amount of shares that you're going to sell to get money back in case bad things happen in the future. It's something you should do with any company, and how much you want to keep. I've sort of gotten in trouble in the past. A company like this does take off. I don't have a plan. It spikes way up. This happened to all of us. And how many of us sold half of our shares when it was over $10? I didn't. Kind of wish I had. And with these small companies, when they do take off, they often overshoot. So you often kind of get an up, a down, and then maybe a continuation. But you have to kind of be prepared for this overshoot if things do happen. I know it's way too early to start thinking about that, but it is something with all of your investments you should be thinking of what are you going to do if it goes up, if it goes down, when are you going to sort of cash out on the bottom side and the high side. So hopefully this update helped you. I don't expect to make any more updates until we get some substantial news on raising capital or the next earnings, which will be not for a long time because the next earnings will be the year-end earnings. So that's not till April or May before they're going to come out in 2023. So if you like this video, please hit the like button and consider subscribing.